Let's talk compliance. This morning, for those who were here, Superintendent Harris from the DFS spoke, and when I asked her what could the industry do better when we show up, she immediately pivoted to compliance showing up. And I want to start there. You each represent different aspects of financial institutions, crypto, traditional, banking. When you show up and talk to regulators, how do you tell your story? Let's start with Kristen. You have vast experience in TradFi, also in the crypto space. How do you talk about your world when you show up to regulators?
Great, thanks, Stu. So I've been really fortunate to sit on both sides of the table as a former regulator and then also a compliance officer. So I think there are a couple things that are really important for an effective kind of regulatory approach. First of all, CEOs, founders, and business leaders in crypto organizations really need to invest in strong compliance leadership. And not just people with crypto backgrounds, but people who have varied backgrounds coming from TradFi, possibly public sector, the government, where I came from as well, but then also people in crypto. So you need that so people really understand how to do risk management, how to do proper risk assessments of the products and services that you have, and really know them quite well. And also to be able to effectively engage with regulators. That's super important too. And so you want to have people who are able to manage regulatory requirements and expectations, as well as have the independence that they need to do their jobs really effectively. Second, and this is a point that Superintendent Harris brought up too, was having transparency and proactive dialogues with regulators. That's something that I have had experience with, and I find it often works much better than not. So again, I think transparency is really key.
Yeah, so resources, transparency. Luce, you've been a regulator yourself before joining FV Bank, but now having been a regulator, having supervised financial institutions, now working for a bank, how do you represent or talk about your compliance program when you meet with regulators?
Well, in FB Bank, we just let the regulator knows what is the corporate governance towards a compliance program, and we present them clear and transparent what we are doing about policies, procedures, and our system. It is challenging nowadays when the regulator is not yet exposed to what is the crypto space, just to educate them of what we are doing, what we are risks, and try them to understand what are we going to do going forward to mitigate the risks that we are encounter in this space, because we are not completely clear about what will be the perspective of the regulator when they will make the examination to us. And that is the big challenge, and we present all transparent. We show our system, our technology, how we'll take our new customer, how we treat them, and how we incorporate them to what is the expected activities that we are having for a normal bank that is not in the crypto space, but when we are exposed to that, how we are doing it, so it's good for them to understand and be fair with us, because that is the major challenge, the unknown of them to what our institution like us doing right now.
So it's important when the regulators show up, even if you're dealing with a crypto-friendly bank, or that they see the sort of the traditional tools, controls, risk management that they would be accustomed to seeing in traditional finance. So finally, Rob, Western Union, one of the, I'll say oldest, but most mature payment companies in the world. It's been around for over a century. When you deal with regulators, especially when Western Union is looking to pivot to more modern technology, crypto or not, what's your experience, and how well versed are the regulators when you're asking them, even though they're coming in to look at a company that's a century old, but the company is trying to evolve and is evolving to more modern technology?
Yeah, thanks, Stu. So, gosh, yeah, because if you think about it, right, the regulator is going to look at a company like a Western Union and think like, oh, it's like McDonald's. I know exactly what the menu items are. I can list it down. It's the same as it was last time. So I think that can often be a big pitfall. And so for us, I say yes, because I think, dude, really kind of two things. Number one is preparation. So when I talk about preparation, that ability, so look, over 100 years, right? How many examinations have we had? The ability to look into the data and understand what has an examiner cared about in the past, specific to a product offering, to a customer, to a jurisdiction, to a specific risk, that's very key. Also, pre-exam requests give you pretty good tells in terms of what they're going to be picking on, what they want to press upon. So your ability to be prepared for that is paramount. The other thing, too, is allowing data to tell your story instead of levels of conjecture of, I believe the risk is this, or I believe the risk is that. You know, people can speak eloquently, but the data is going to be significantly more impactful if you have it to prove your points in terms of where you're impressing upon your program, how you're installing your controls, and so forth. So I would say this. Today, am I ready to tell my story? Absolutely. Tomorrow, is that story going to change? It should. If I'm growing and scaling as a business, 100%. And so it's incumbent upon me to be prepared to tell that narrative.
Yeah, and we also heard from Superintendent Harris this morning that she will test any narrative with the data, right? Show me the data, don't just tell me the good story. We've touched upon this already, but financial services, evolving space, that means new technology. Kind of old rules apply to new technology, but sometimes the rules, the regulation trying to catch up with the technology, that's difficult to navigate. So, Luz, let's start with you again. How is FV Bank, or banks generally, adapting to new technologies, not only in terms of incorporating them into your own compliance program, but again, educating the regulators about how you're using the new technology and why?
Well, when we are in the crystal space, all this technology, and the only way that you can manage the compliance is with technology. If you don't have technology in your bank for helping you with the compliance functions, you will be failing. So the technology for us is the pivot and the pillar in our institution from all the customer lifecycle and the monitoring lifecycle. We are leveraging on that. We are using the technology for the onboarding, for leveraging the escalation of the business, and it is helping us a lot on what we are facing in the future, what we have right now, and in terms of regulators, we show them how we are doing it with technology. We cannot be back to paper trails or paper onboardings. Just in the monitoring, leveraging on the most accurate real-time monitoring that help us to identify those areas that and those activities that customers are doing right now, and helping us maintain our institution clean and free of bad actors. So, but the only thing is using technology and using the best available in the market for we be successful in our institution.
Technology as a tool is an improvement, and then educating the regulators, that's why you're using it. You're not using it to skirt rules and regulations. You're using it to advance your compliance with the rules and the regulations. Rob, what are your thoughts on sort of financial evolution, TradFi, trying to keep up with new technology, whether it's crypto or otherwise, and compliance requirements? We touched upon this a little bit before on the first question, but how do you see those two things converging?
I got to admit, I don't right now. I would say the gap is getting shorter, but I think it's still material. And I think there's a couple things that are causing it. One, I don't think it's necessarily the foremost thought from a technology perspective in terms of, hey, how can I apply technology to a part of the business that isn't generating revenue. I mean, that's just a natural thought component, right? And so we're a little bit, in the back burner as a result. And some of those, we get the waterfall, we get a little bit of the runoff that occurs as a result, and we'll take that. The other thing I think that's bigger, actually, and I've seen this play out both in my time at large tech firms and financial institutions and now Western Union, is the heavy reliance upon third-party providers from a data perspective and a technology perspective, and how tentacled they are into systems internally as a result. And so even if you find an awesome technology that you can apply and you can move forward with a proof of concept and show material savings at the end of the day, you're still needing to have this large conversation with your tech side about buy versus build, about decoupling from the older technology, what would that look like, how much would that take, and so on and so forth. So I think, honestly, number one, a lot of compliance people don't know how to have that conversation with tech people. They just give up because it's just easier. It's like, oh, I'll go back to my spreadsheets and I'll file my SARs and I'll meet my SLAs and the regulator will check the box and I'll sleep well, right? But I think that's the big downfall ultimately is tech will say, no, we'll build it, but we'll build it in 5 years. Just stay the course and we'll be fine.
So Kristen, picking up on that, and you've been at various crypto companies, Novi, Paxos, Binance. So in your opinion, what compliance changes have you seen in the crypto space? And focusing not only on the challenges or maybe the successes you've had in incorporating those technologies, but also, again, going back to this conversation with the regulators, how do you change the narrative around compliance when it comes to crypto? Because maybe the perspective of the regulator coming in is when they hear crypto, they hear in their own mind non-compliance.
Yeah, no, great question. I think I'll start with the Novi Experience, which was part of the Libra DM project. And so that was really exciting because we had a purpose-built compliance program. And so part of that was we were able to sit down proactively with regulators and discuss the principles as well as the controls that we were crafting. So we were really going, particularly with the US federal regulators, really moving with them and hearing their feedback. Again, it was a very controversial project, but I think at the technocratic level across the government, there was a lot of collaboration and they were really quite interested to hear what we were doing. Later on, although the project didn't really take off just due to political reasons, we did work quite closely with the New York Department of Financial Services. We met with them regularly on a monthly basis where we were presenting all of the suspicious activity reports that we were filing as well as trends. And so I think that was extremely helpful because we were going through the education process with them. We were learning also at the same time because we were using kind of internal kind of infrastructure and working very closely with our engineering teams to craft some internal tools, but then also we had to rely on some existing technology from Facebook at the time. I think, very similar with Paxos, a lot of great dialogues with New York DFS, and then Binance also. I think this is kind of where the challenge is, and this is also at HSBC where I worked, where you have these massive organizations that did not have purpose-built kind of compliance requirements built into the tech stack. And then trying to explain to people who just have engineering backgrounds or tech, particularly in the tech space, why this is so important, why regulators are starting to put heat on the company, that's really crucial. So I'm really excited right now because I'm at a startup that's in stealth mode. But I was one of the first hires as the chief compliance officer, reporting to the CEO, and I am setting up this program from scratch. So it is, hopefully we're going to do it right this time. And it's really exciting to have, again, that dedication from the CEO, the founders, business leads, to make sure that that's integrated at the get-go.
Yeah, it's a really fascinating point and something that I'm getting smarter about in terms of how tied in the compliance officer and their teams are with the technology and how close they're actually working with the engineers to reduce the reliance on third parties or to help with the integration of third parties, but I think most importantly, to develop your homegrown and organic solutions.
Yeah.
So as we think about, and the last panel touched on this, but as we take innovation even further, we talk about AI, we talk about machine learning. Do you see those as tools that can help you all do your job, whether it's know your customer, transaction monitoring, sanction screening, or is that just too far? Is that sort of a few steps ahead in terms of the evolution of your program? Rob, let's start with you.
Yeah, no, I don't think it's far-fetched. I think you have to pick your spots very strategically and carefully. So I think the first thing that I would put out there is with, and this may not be true with all shops, but I would say the majority of them still have antiquated compliance processes where a lot of administrative and manual work is being done. Whether it's actually, typing out a memo or it's attaching particular documents or sourcing data and so forth, right? So I kind of look at that as this is the low-hanging fruit, right? Where tools within the AI universe, I think, can easily be shown and regulators can gain a sense of comfort to say that, oh yeah, that makes sense, exactly. I could do that on my iPhone. So we start there. Now, going beyond that, yes, gets a little bit more complicated in terms of how do you strategically apply and how do you avoid things. I think it was mentioned in the last panel about, bias is pretty consistent in terms of a topic that gets pressed upon from an AI perspective. But I think the big thing, and we've talked about it a few times, is demonstrability, right? So how do we leverage these tools, which we can effectively, but then also make sure that we're pressure testing our ability to be able to show exactly how did we decision specifically, right? What were the variables and the parameters associated with associating risk or this level of risk with this customer in this jurisdiction for this particular product? So you have all these moving parts where I think AI can be applicable, but honestly, I have yet to see what I would call more typical third-party providers be able to do that. One other point to that as well is, there you go. I'm unsure if third-party providers really are highly motivated in the space at this point to provide those types of solutions for compliance as a result. And I think the regulators kind of push upon that if you look at 10, 12 years ago, right? What has really fundamentally changed in terms of our ability to be able to execute on programs like sanctions, like KYC, suspicious activity reporting, and transaction monitoring? It's pretty much the same. And so if it ain't broke, don't fix it. And as a result, really at market, there's not a lot out there right now that I'm impressed with.
Luce, what do you think in terms of this next generation of tools, whether it's AI, machine learning? Do you think it's imminent? Is it a tomorrow adoption, or do you think it's still maybe, a generation off in terms of the evolution of a compliance program?
What I think is imminent is something that we need to leverage on. It's a great tool to help. Obviously, we need to proceed with caution, but in a fast pace, because that will be leverage your business and escalate doing the right thing in compliance. So the way that you can use AI for onboarding clients, AI for analyzing your transactions, for monitoring, why not? Why not doing it? And we need to move to doing it fast because this is an ever constant changing and evolving space that we need to take advantage. Technology is already here. And if you have the opportunity to go outside to take it, it's fine. But if you don't, the best way is just to develop in-house and integrate all those partners that we have and having the best tool for you to use and for giving the most benefit of for your institution. So, this is imminent. This is what we need to do going forward, and the technology is already here.
So, Kristen, let me round out this line of questioning with you. Given your current role, where you're really building a company and a compliance program from the ground up, how do you think about this next generation of tools?
I think we absolutely have to do some experimentation with it. However, as I'm thinking through this, There are a lot of vendors who are selling the capability to use AI to write narratives for suspicious activity report drafts. I think like most compliance officers would probably have a heart attack a little bit, with that, because you can't just submit something like that to a regulator without checking it. So, but I do think there is something to that. And we really need to be putting in place, like, I would say putting in some of these practices, but also going back and doing effective sample testing, really making sure that, what's being produced is accurate. So it is going to take a lot of, I think, work from the compliance staff to kind of really watch how it develops over time. And again, like everything, these are dialogues that need to happen with regulators. I think you need to be able to demonstrate to them how effective this is. Also demonstrate the results where it wasn't effective and say how you're addressing it moving forward. I do think at this point, everyone recognizes, particularly in the crypto industry, but also regulators too. I mean, this is something that isn't going away, and I think just like distributed ledger technology, it's the future. So we need to be figuring out how we can adapt and be flexible, but make sure that it's effectively managing risk.
Yeah. So let's shift a little bit. Let's talk about compliance enforcement actions. And we can certainly talk about that in the context of crypto companies. We can also talk about that in the context of traditional finance. Just look at the TD Bank news from last week. But Krista, let me start with you, because you have experience with the U.S. Treasury. You have experience with HSBC, where you and I both overlapped during a deferred prosecution agreement. Spent some time at Binance. Can you shed some light in terms of how you think about the imposition of compliance enforcement sanctions, and what I mean by sanctions in this point, enforcement actions on the crypto industry? Do you view it sort of as crypto being held to the same standard as TradFi, or is a different standard being created?
Yeah, absolutely. I think across the spectrum with, our time at HSBC, we saw a wave of really, massive, that was the uptick of big enforcement actions against traditional financial institutions, where we started to go into the billions, not the millions. We're now starting to see this. I think, obviously, Binance's enforcement action was historic on many levels. It was one of the Treasury's first ever, kind of the largest enforcement action, particularly against a crypto entity, $4.2 billion. The CEO, went to jail for 4 months, and then there was $1 million fine against the chief compliance officer there. So that definitely set the stage for how serious the U.S. government is taking this. And again, it was all the same kind of failings that you saw in the traditional financial sector. Violations of the Bank Secrecy Act, which is the U.S.'s anti-money laundering legislation, sanctions violations, and then in particular for crypto entities not registering as a money services business with FinCEN. So I think there's a lot of similarities. I think, you could debate on particularly the jail time and the fines for the chief compliance officer, but I really do think that set the stage for kind of a wave of enforcement actions that we're going to see over the next couple of years in the crypto space. And I think that the Binance enforcement action really set the stage for that.
Yeah. Really important. I mean, HSBC, TD Bank, very serious enforcement actions, but CEOs are not going to jail.
Yeah.
Right. The crypto CEO went to jail for 4 months. And the other thing you mentioned, which I think gets lost on people sometimes, is that the compliance officers, they're on, even though they're the second line, as we think about the 3 lines of defense, they're on the first line. And when things go wrong, you're held personally accountable under the laws. So a little bit of a public service announcement. Liz worked for a bank. There's a lot of talk, certainly in the United States, about crypto companies or even individuals who are affiliated with crypto companies being either debanked, cut off as customers, or not being onboarded. How do you think about your crypto tolerance for customers, KYC, as a compliance officer of a bank?
In case of FBBAN, so we are a crypto-friendly bank, so that is our customers. So what we're doing in related to them is just have a very strong compliance program, and where we monitor them, we're requesting them to comply with and align their policies to what are our standard and our risk tolerance. And we can not say that we will not accept those customers because it's what we are and what we are moving to. But if we manage our compliance program in the way that our regulator feel comfortable and in a way that our customers are pretty responsive to us, and when we want to request some and haste due diligence, some more information, and have this open conversation with our customers, and that we build that confidence and reliance on what they are doing, we are good to accept them as our customers and continue the long-term wealthy relationship that we have with them. And it is like the business that we're doing right now.
Rob, just going back to the conversation we were having with Kristen about enforcement actions. I know it predated your time at Western Union, but Western Union had an enforcement action. They lived under a consent decree. You've now inherited a program. Looking back, what were the lessons that you think Western Union learned from that experience?
Yeah, thanks. A couple of things. So I think from a context set, right, I think about when I go into my office and I have these two big binders, I kind of call them my Old and my New Testament. And they're the things that came through in terms of the consent decree orders and the monitorship and the details, right? And so, the learning really was this as I've studied that, and I've been in the role now for about 13 months, and talking to a lot of my people. So number one, first, obviously, is that matter of detailed attention of, okay, let's get tactical. What do we actually need to do? What controls do we need to build? What programs, right? I think that's kind of the easy thing because that gets very, very prescriptive. And I think there's a general kind of mentality to take that approach to say that if I check these boxes and I continue to show them that I'm checking these boxes, everything is cool and I'm great. And there's a sense of veracity to that. However, the problem is then you're relying upon static controls just to check those boxes. And the way, in many circumstances, how that handcuffs your business, kind of really chokes the customer experience from that perspective as well, really is not sustainable, ultimately. And so I think the learning has been in terms of, hey, let's do the right thing. Let's, as we said in the earlier session and we said in this session, no regulatory surprises. Let's get in front of things. But let's effectively use our data, also meaning that if we need to pivot and we need to be agile, we can tell that story and we can share with a regulator in terms of why we decided to change a particular control or why we decided to retire. We also talked about, and I think governance is a big piece of that as well. How is your governance set up to be able to be quick so that I would call it the appropriate red tape. And, red tape is effective, but it shouldn't completely bog down everything that you're trying to do. And then, I think the last thing from a culture aspect, and this is where I would caution in something that I've learned. It's easy for people who have gone through those circumstances, and I have a high level of appreciation for those individuals. I know right now with TD and in the past with HSBC and with Western Union, but people have lived through that, and that's real, and that caused people to lose sleep and concern. And so being sensitive to that, but then also helping from a leadership aspect, people through change management, helping them understand that yesterday is not today, what has changed, and how can we make the business better, continue to grow and scale, do the right thing for the customers, and at the same time have the right conversations with regulators and keep moving ahead.
Yeah. So be data focused, but pull the lens back and not lose sight of what you're actually trying to accomplish. In the last minute we have left, 10 seconds each, if I were to ask you what is the single most important element of your compliance program, what would it be? We're going to go Luce, Rob, and Kristen. So Kristen, you get the advantage of thinking about it a little bit longer, but Luce, what is the most important element of your compliance program?
The compliance culture, because you can have your policies, procedures, your audit, but it's the whole institution is not compliance minded, everything will fail.
The culture of compliance. Rob?
I'd say partnership and customer empathy. If you can't understand what the business is trying to do and appreciate it from a compliance perspective, you will be lost.
Bring it home.
Okay, but both of these, but also I think just making sure your compliance program works. Can you actually implement it? Is it actually operational and effective? And that requires end-to-end testing on a number of things, particularly to make sure when you're working very closely with engineers that the infrastructure is hooked up properly to the flow to the customers, on back to any third-party vendors that you have. So that's extremely important among these two other points.
Well, thank you, Luz, Kristen, Rob. Thank you.